Today, Bitcoin trades above the $21,000 level for the first time since November. Justin Sun wants to scoop up DCG's assets, and we explore how crypto exchanges have been trying to show investors they have enough money to cover a bank run. Welcome to CNBC's Crypto World. I'm Jordan Smith. Bitcoin traded above the $21,000 mark, but as of noon Eastern, dipped by 0.7%. Over the weekend, the cryptocurrency shot up above the $20,000 level for the first time in more than 2 months after inflation showed signs of easing. Ether also dipped by about 1%, trading around $1,500, and the Matic token dropped as well, trading around $1. All right, let's talk about the top stories. First, the co-founders of Three Arrows Capital are pitching a new company that looks to capitalize on crypto's growing list of bankruptcies. The founders of the bankrupt crypto hedge fund, Kyle Davies and Su Zhu, are listed as founding members in a pitch deck reviewed by CNBC for a distressed debt marketplace called GTX. The deck says the platform could launch by the end of February. The platform would tap into the growing market for crypto claims, made up mostly of investors who have digital assets tied up in the FTX bankruptcy or other cases. Some of these investors have been selling these claims for a steep discount. Three Arrows Capital, once valued at $10 billion, was ordered to liquidate after a plunge in prices and risky trades left it unable to repay lenders. Next, Tron founder Justin Sun is ready to buy up Digital Currency Group's assets. The crypto entrepreneur told Reuters he was willing to spend up to $1 billion on assets belonging to DCG, the company behind a bunch of crypto businesses like troubled crypto lender Genesis. Sun didn't tell Reuters which assets he was interested in, but DCG has been considering selling some of the companies in its venture capital portfolio to raise cash. The lending arm of Genesis halted withdrawals after the fall of FTX, and the company faces new charges from the SEC, along with Gemini, alleging the companies offered unregistered securities. Last, House Republicans are launching a new subcommittee to take on crypto regulation. The Subcommittee on Digital Assets, Financial Technology, and Inclusion will be part of the House Financial Services Committee and will work to craft bipartisan crypto regulation. Arizona Congressman French Hill, who's been a strong supporter of the crypto industry, will take on the role of chairman. Hill's previously pushed for the study of CBDCs and for more clarity around crypto taxes from the IRS. All right, on to our main story. Trust in digital assets has plummeted following the implosion of FTX, especially towards centralized exchanges. Crypto World's Talia Kaplan spoke with industry insiders about the push from exchanges to turn to proof of reserve reports. But how reliable are these reports, and are they enough to restore trust?
Several crypto exchanges rushed to produce proof of reserve reports after FTX's sudden and shocking collapse. The goal of these reports? To show that a crypto firm has enough money to cover customer withdrawals. And companies in the space have been trying to lean on the credibility of audit firms to reassure worried clients.
Now more than ever, there's a push for more transparency as it pertains to crypto. And following FTX's implosion, crypto exchanges announced the release of proof of reserve reports. Is this enough to restore trust?
Proof of reserves is certainly one element. They only go so far. You need to understand where the liabilities are for these different entities. The issues that we've seen all year have not really been about the assets that the major entities that failed have had on hand. Instead, it's been about their liabilities and their ultimate liquidity. And this happened with FTX. I think this is currently a situation that's ongoing with DCG and Genesis.
Regulators at the Securities and Exchange Commission are also concerned that customers might not be getting the full picture from these reports. According to the Wall Street Journal, Paul Munter, the SEC's acting chief accountant, warned investors to be very wary of some of the claims that are being made by crypto companies.
In terms of the credibility of Binance, you disclosed that Binance holds about $60 billion of crypto assets. But thus far, you haven't disclosed your liabilities. And I wonder why that is and whether you will.
Yeah, so we are working with firms to do the audited financials, liabilities, etc. Very simply, Binance does not owe people money. Binance does not have loans from other companies, from other funds.
We have seen what they released for proof of reserves. We do think it's pretty obvious that it, is inferior what they've released thus far. Maybe they'll improve it. We'll see.
Kraken's incoming CEO, Dave Ripley, says his crypto exchange executed proof of reserve reports twice last year and has another planned for this month. In December, Crypto.com published the Proof of Reserves report signed off by global accounting firm Mazars, attesting that customer assets were held on a one-to-one basis. That means deposits were backed by the company's reserves. KuCoin said its report was also delivered by Mazars.
It kind of backfired a bit on Binance with their attempt at proof of reserve. I think what you really need is you need to have a well thought out program where you have external auditors. A lot has to be done with earning back the trust of investors, and that will only be achieved with greater transparency and with independent third-party audit.
The challenge? Some accounting firms no longer want to be involved. In fact, right after Mazars released proof of reserve reports for several exchanges, the firm suspended all work with its crypto clients. In a statement to CNBC, Mazars said the move was, quote, due to concerns regarding the way these reports are understood by the public.
Last month, auditing firm Mazars said it was pausing doing proof of reserve crypto work and pulled copies of the reports from its website. What do you make of that?
It was disappointing, but it's not surprising. When you look at those audit reports, they were anything but an audit. To use the technical term of an audit would really be an injustice. It was essentially a statement of reserves, but there was no mention of liabilities, and it's not really possible to do an audit without mentioning liabilities. And these proof of reserves reports need to become proper audits. We need to be able to sit down and look at a third party, at these centralized crypto entities, and make a financial assessment of them. And right now, it just simply isn't possible because the information's not there, it's too opaque, and there's just not enough information in the public sphere.
This is probably auditors just wanting to make sure that they don't get caught with their pants down or ultimately have another black eye because they missed something. And I think it really ties back to not wanting to be misleading about proof of reserves versus proof of liabilities. If you're only seeing half of the ledger, half of the accounting apparatus for a major exchange or custodian, the last thing that you want to do is have your name attached to that report without understanding the full liabilities. And in many cases, because crypto is a global ecosystem, you do have large entities, large exchanges that have multiple, in some cases dozens of operating subsidiaries. So there might be cases where certain operating subsidiaries have a P&L that is highly indebted, but the parent company or sister company might have tons of assets on hand, not a whole lot of debt, and I think pulling that all together requires off-chain accounting, like real-world accounting. It requires real-world regulation, and that's going to take some time, right? Because there are different rules per jurisdiction. We don't have real true global standards, and the only real financial reporting you can do, and this is what Messari focuses on, is with these decentralized protocols and assets themselves, because everything is transparent and on-chain by default. So I think it will take some time to get the policy right around centralized services. That's where the focus should be. And then in the meantime, I think the market can solve for many of the decentralized challenges that we're going to face with DeFi protocols and other peer-to-peer protocols.
All right, one last thing before we go. The World Economic Forum is underway in Davos, and Bank of America CEO Brian Moynihan spoke with CNBC about crypto. He says he thinks the traditional financial system can compete with digital currencies and discusses the future of blockchain technology at B of A. Take a listen.
We've driven P2P payment systems, real-time payment systems, connecting worldwide real-time payment systems. Those things allow to get to the small balance transfer from country to country by consumer to small business, by me buying something out of Brazil or something through e-commerce and stuff. And so that stuff we have to keep working on driving down the cost. Inside the payment system works pretty damn efficiently across the world. When you go to the blockchain side, we have 200 patents applied for 100 granted in blockchain. So we understand it, we try to apply it. It is extremely hard to find the compelling value proposition yet. It will come because information, data, and ownership that can be accountable across jurisdiction is interesting. But we're sitting with 100 issued patents. I think we have more than most people will ever dream of having. And we applied it in versus business.
Moynihan's comments come as a new report from B of A says central bank digital currencies are the future of money and payments. In the report, analysts wrote that, quote, CBDCs have the potential to revolutionize global financial systems and may be the most significant technological advancement in the history of money. All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.